So the stock market just hit another all-time high, and right when the most important jobs report of the summer is about to drop. Sounds like a trap, or maybe a turning point. Let's break it all down. First, let's get one thing straight. The S&P 500 and Nasdaq are both at record highs. We are talking about a 3.5% jump for the S&P 500 and over 4.1% for the Nasdaq just last week. Even the Dow's joined the party, up nearly 3.8%. So what's fueling this rally? Is it earnings? Not really. Is it global growth? Not quite. It's expectations. Expectations that the Federal Reserve might finally cut interest rates. Maybe as soon as July. Now, hold on. Interest rate cuts in the middle of an inflation fight? Let's dig in. Right now, markets are betting big on a rate cut. According to the CME FedWatch tool, there's a 93% chance of a cut by September. That's up from 70% just a week ago, and a 21% chance of a cut as early as July. Why this sudden optimism? Well, we've heard from the Fed folks themselves. Michelle Bowman, one of the governors, said the labor market's looking less dynamic. In other words, it's slowing down. She also pointed out some softness in demand and said we might need to start focusing more on jobs than just inflation. Sounds like a pivot, right? But not everyone at the Fed is on board. Jerome Powell, the Fed chair, is more cautious. He told lawmakers last week that the Fed is in a good position to wait, no rushing into cuts. So on one hand, we've got signs pointing to economic softness. On the other, the Fed's being careful not to jump the gun. That brings us to the jobs report. This Thursday, yes, right before markets close early for the 4th of July weekend, we are getting the June non-farm payrolls report. Why is this report such a big deal? Because if the Fed is going to cut rates, they need evidence that the job market is weakening, and that's exactly what economists are expecting. Here's what they're predicting. 116,000 new jobs, down from 139,000 in May. Unemployment rate ticking up to 4.3% from 4.2%. Wage growth cooling off to plus 0.3% month over month, down from 0.4%. Wells Fargo even said that hiring will likely continue to moderate due to government hiring freezes, policy uncertainty, and soft business demand. Now remember, the Fed has a dual mandate. 1. Keep inflation under control. 2. Ensure maximum employment. And right now, inflation's easy, but so is job growth. So the Fed might be getting ready to shift gears. So the big question is, are markets getting too excited too soon? If you look at the S&P 500, it's up over 23% from its April low. Why? Because Wall Street is betting on rate cuts, tariff relief, and strong earnings forecasts. But what if those rate cuts don't come in July? What if the jobs report isn't weak enough to push the Fed? Then what? Some strategists say